Hello everyone, welcome to the IchimokuCharts.com daily analysis for the S&P 500 for Thursday, October the 20th, 2011. Well, a continuation of the trend to the downside today. 4 trading periods ago we had that change of trend with that fairly bearish candle, and the day following we had, in bar chart terms, an outside day and then an inside day in bar chart terms. So the trend had changed, and this is basically a continuation of the trend to the downside, where the current candle has a lower high and a lower low with reference to the previous candle. A red-bodied candle, however, and even though the trend is down, the buyers made net bullish progress on the day between the open and the close as opposed to the previous day. We can see here throughout the last 4 or 5 trading days we've had the momentum swapping from the buyers to the sellers continually, and becoming less and less actually, so wouldn't surprise if we see another down day with less momentum for the sellers next. The large shadow on the bottom of this candle is quite important. We tested this 1200 region again, and we highlighted that area previously. We've tested it on quite a few occasions now in the recent past and failed to take that area out. This is now the 4th occasion that we've tested 1200. And it should hold as a decent support level because it's a round number. We now also have the Tenkan-sen trading around that level as well, so it's strengthening this potential support at that level. Now, in Ichimoku charts terms, the market is trading within the cloud. So we have a neutral market in big picture terms, but a bullish market in the medium term and fast term time frame by trading above the Kijun-sen, the pink line, and the Tenkan-sen, the green line here. The areas of support down below this region, if we do get a breakout down to the downside below this 1200 area, then we do have support at 1183, 1173, which coincides with the bottom of the cloud, and then support all the way down to 11, roughly around the 1150. To the upside, the market will need to build some momentum to break out to the upside. We have strong resistance overhead at 1232 and then at 1246. And obviously the top of the cloud. Now the cloud is quite flat there, so a breakout to the upside, we should use caution in taking a signal from that. But basically the market's congesting in this fast term and medium term time frame, testing resistance up around the top of the cloud and support around 1200. We need to be patient, wait for this market to break out in either direction. Next we'll move on to gold, and here we can see we have eventually had that breakout down below the wedge that we described previously. Had the market selling off quite strongly in a decent downtrend. The wedge where the peaks and troughs within the pattern were converging, making higher troughs and slightly higher peaks, and this convergence of the lines drawn through the boundaries, and then the breakout to the downside. We didn't like the breakout initially because it wasn't a terribly bearish breakout, and even though we've had red-bodied candles for today's trading, we've seen the sellers lose commitment once again. But we have had a series of these red-bodied candles, so that is quite significant. And we've also taken out the support around the 1641 level that we tested over the previous 2 days and failed to close below. There is strong potential for this market to trade lower. Certainly we should be watching the low of the current candle for a potential test down to 1559 and then down to around this 1535 level at this major swing low, and then certainly testing down to the round number 1500. In Ichimoku charts terms, the market is bearish because we're trading down below the cloud, and we did find resistance at the bottom of the cloud when the market was trading up within this wedge pattern, and we had a clue to the direction of the breakout because we were trading down below the cloud. Strong resistance overhead from the cloud, so there wasn't strong potential for a breakout to the upside with this pattern, although we did require confirmation of that breakout when it did occur. In terms of the Kijun-sen and Tenkan-sen, the market is now trading down below both of those indicators. We have been trading below the Kijun-sen for some time, and we're continuing that move to the downside, a bearish market in the medium-term time frame, but now also trading down below the Tenkan-sen and maintaining below that indicator. So bearish market in the fast-term time frame. So a bearish market in all three time frames. Now, if we do see this market rally, obviously 1641 will be resistance. The Tenkan-sen and Kijun-sen will hold as resistance as well at 1650 and 1681. But a bit of bearishness in this market, potential for some decent downside. The market is showing some momentum to the downside, but worrying that the sellers lost commitment throughout the trading day today. Moving on to silver, and we can see we have a continuation of the trend to the downside. Candle making a lower high and a lower low. Red body candle, so the sellers have made net bearish progress, but once again we have had them lose commitment in this market. We can see the shadow on the bottom, and the market tested around this $30 level, and that's quite an important level for silver. We can see that we tested around that area on quite a few occasions, and the sellers lost commitment at that area, so a very big level for this market when we open trading tomorrow. In Ichimoku charts terms, we are trading down below the cloud and a fair way below the cloud, so we have a bearish market in big picture terms, but a bearish market also in the medium term and fast term time frames by trading down below the Kijun-sen, the pink line, and the Tenkan-sen, the green line. Chikou here is confirming the negative price action that we're seeing, so a fairly bearish market. Obviously for tomorrow's trading, that low around 30 is very, very important. We have this range of support that extends all the way down to about 28.50, so very strong support all the way down below there. Some decent resistance overhead, however, 31.28, 31.74, and up to this swing high around 33, and we had decent downside price rejection from that level previously when the market was trading up around there. Also, the Tenkan-sen is trading at 31.52, so that will offer potential resistance. But certainly this $30 level is going to be very, very important for the market for the next day's trading. Next, we'll take a look at the corn futures on the daily chart. And here we can see we have a very solid downtrend. The market broke out down below the Ichimoku cloud, a bearish breakout and bearish signal, and then solid recovery, retracing a decent amount of this downswing. Trading below the cloud, so we have an overall bearish market in Ichimoku charts terms, and also trading just below the Kijun-sen, but we have retraced back towards the Kijun-sen and potentially finding resistance at the Kijun-sen. This final candle here is the trade as it's developing throughout the next trading day, so we disregard that, but it looks like we could have a breakout above the Kijun-sen, although we shouldn't preempt that. But we have had a bullish move up to the Kijun-sen here, so if we do see weakness in this market, we could see the market sell off. In terms of the Tenkan-sen, we are trading above the Tenkan-sen, so we're bullish in the fast-term time frame, and that's reflecting this strong upside momentum that we've seen. We have had this congestion area develop after this decent uptrend, and that's very similar to a symmetrical triangle, and they tend to be continuation patterns, so a breakout above, as we're seeing as this candle is developing at the moment, is the way that it looks like this continuation from this trend may continue. Potential for this market to trade up towards the cloud, up around the 690 level. That's the next area of resistance, other than this swing high, which is up around 660, 665. And so overall a bearish market in big picture terms. Bullish in the fast-term time frame, pretty much neutral in the medium-term time frame, looking for a breakout, and it looks like that's what's happening as the market is developing at the moment.